This is it, guys. These are my stock picks. This is like stock pick video on steroids, really. This is an insight on my actual holdings, okay? This is going to be as of September 20th that this video is being pushed out, and I really like to do this for you guys. It really provides visibility on how what my portfolio looks like, and it allows me to kind of validate what I talk about, where there is no perfect portfolio out there. There really isn't. If I was going to take an objective look at this portfolio, I would find flaws in it, and it's mine, okay? Why? Because it's a constantly evolving thing, okay? I'm constantly looking at this, looking at ways to improve it, okay? But I've been building this portfolio for years, and it's got a very solid foundation. So really right now I'm just kind of fine-tuning, you know, how my portfolio acts, all right? Now there's a few things that I don't have on here with regard to my portfolio. I have a very large S&P 500 index fund, and that's separate from any of this, okay? I also have 529s for both of my children, okay? And that's also not included in these. But for you guys that are liking stock picks and you're tired of listening to every other channel out there talking about the same three stocks, Nvidia, Apple, and AMD, I'm gonna give you a bunch of stock picks, guys. I'm gonna be coming out with a ton of videos that actually talk about some of my favorite stocks that I don't even own, okay? And there's no other YouTube channel out there really talking about it in depth, guys. There's so many good companies out there. If you just took a listing of the S&P 500, a lot of those are gonna make sense to you, right? You're gonna look and you're gonna see 3M, and you're gonna recognize some of these really, really good companies, John Deere, Caterpillar, and they're gonna start to jump out at you. But the trick is to kind of look at these companies not as just big companies. It's to look at them from a potential investment opportunity, all right? Because that's really what we're striving for, is to get the best quality assets within your guys' accounts, all right? Some of these you guys are going to pick up on from my top stock picks of the month. I've yet to come out with my top stock picks for October, as I'm actually retooling my portfolio right now, and I'm trying to identify, and I'm really not looking to add a whole lot to this portfolio. I'm really looking to take a more of a defensive positioning, all right? But this is my snapshot. I've done this before. Please go back. It was some time ago, maybe 5 or 6 months ago, that I did a snapshot into my portfolio. Go back and watch that, guys. There's a lot of holdings that I still own now 6 months later, which in the investment community really is nothing. But there's going to be stock picks that I've actually traded out of. I've taken profit and I've moved on, and I've evolved into other stock picks. So what I'm going to do is I've got this broken down here into 2 columns, and when I actually edit this video, I'm going to throw the picks up on the screen so it's cleaner. So guys, don't worry about reading the whiteboard back here, all right? I'm just going to throw out the information that I've got up here, and then I'm going to leave it in the description, and I'm going to actually edit it so you guys can actually follow along while I'm talking when I go ahead and throw down on this video, all right? This is actually my portfolio in green. This is actually my spouse's portfolio over here, guys, and I'm just going to go down the list, and I'm going to give you the percentage of allocation of my overall dollars invested, okay? Number 1 holding is Apple at 3.33%. overall allocation. Next one is Citigroup in the financial sector. It's probably my very favorite bank, all right, at 2.24 percentage of allocation. As you guys start to kind of understand, you know, how I defense position, very few of these positions actually creep over 5% of a total overall holding. As a matter of fact, most of them around 2 to 3% on some of my larger holdings, and actually below 1% on some of my smaller holdings, okay? Disney. Disney will be one of my top 5 stocks to own forever, okay? It's one of those stocks that you can just buy and put into a portfolio, and it's a stock that really you shouldn't be buying anything else in lieu of this until you have those top 5 stocks. But you're going to have to stay tuned. It's going to be a follow-on video that I do about 5 stocks that everybody should own, all right? And Disney's one of them, all right? Johnson & Johnson took a little pullback today. I actually thought about taking a slug at it and actually buying more. I didn't. I held off, but it's a long-term holding of mine at 2.17%. Mondelez is another long-term holding. I actually got Mondelez many years back when it spun off of Kraft Heinz. It was actually Kraft Foods at the time, and now Kraft has merged with Heinz Food, and there's actually been some discussion about them buying back Mondelez. I would love it. That would be wonderful. But they're actually two independent companies. Mondelez is more of the international snack business, and it's a fantastic company, all right? Marathon Oil, all right? This is one of those companies that I've recommended on my monthly stock picks. Actually bottomed around $10. It's up around $12.50 right now. For you guys that actually bought on that recommendation, you're probably just about even or a little bit in the black on this pick, but I still feel just as comfortable with this pick. I actually did a size down in the number of shares because I've got a really big position, actually 9.15% of my total overall. And a lot of you guys you beat me up over it. It's fine. I'm taking an aggressive posture on energy right now. And I'm happy to do it in Marathon Oil. I love the company. I love the restructuring. And this is actually at the hands of quite a bit of research that I've done on Marathon. And I'm happy to own it long term until they get the restructuring and the long-term trend of low oil actually starts to shake out and we start to approach $60 oil, which is what it's going to take for this trade to work here. All right. Praxair. Praxair has gone nothing but up. And you guys are going to have to understand, I'm not going to do videos tooting my own horn about all the stocks that I recommend going up, but most every single one of them have gone up. You won't notice USB. I actually did not take a position in USB. When I came out with my top 3 picks last month, I bought 2 out of the 3, and that's just what I did, and USB just really didn't fit in the portfolio, and I like the latitude to maneuver my money how I want to, and I did not take a position in it, and it's actually come down a little bit off of the recommended price when I actually recommended the stock. All right, but Praxair is actually up quite healthily, and I'm actually going to hold this long term. It takes a really nice section in my materials section. As a matter of fact, out of this entire portfolio, my materials allocation is made up in just one name, and that's Praxair. And that's 1.20% over here in Praxair, and then some of my diversified assets actually pick up for materials to get me 2.08%. UTX, long-term industrial holding, my very favorite industrial holding, took a pullback a little bit here beginning of this week or the end of last week, and I actually picked up, I used it as a buying opportunity, and it's gone nothing but up since then. So anytime you get a hiccup in these good quality names, you want to be looking at taking advantage of it as opposed to panicking and exiting the position, okay? And then finally, this is the only limited partnership that I have. I've recommended this to a lot of people who've hit me up with commentary looking for a safe, diversified asset play and also looking for a higher than average dividend yield. I wouldn't normally recommend any stock that carries a dividend yield of 8%. I would never do it. However, Blackstone is an exception to that rule, all right? Their dividend, as a part of a limited partnership, I'm paid special dividends, I've paid long-term dividends, I'm paid super dividends. It's really an enjoyment to own this company. I've owned it for a couple years. I bought the stock in the low 30s, right around 30. It's went down into the low 20s, and I've just continued to buy the stock up, and now it's actually forming a nice base in the low 30s, around $32 a share right now to become part of the Blackstone Group Limited Partnership. These guys are some of the best in the business. This is my portfolio, all right? This is the self-managed Roth IRA account on my side of the house, all right? Now, I'm a little bit more aggressive. I've built this portfolio to take on a little bit more of risk. My spouse's portfolio is filled with basically blue chip stocks that are high dividend payers. The ironic part about it is her account is actually outpacing my account, and I think it's wonderful. It's great to compare the two. It's great to see, you build this animal, to perform as well as it can, and then you build this animal over here, or this machine, to perform as well as it can, and it's really kind of fun to watch these two, perform and actually kind of see what strategies work. And this strategy actually is working more than my strategy, which is all right, and I'll just leave it at that. But anyway, to go down the list of the self-managed Roth IRA, account number 2, Chevron. It holds a really big position, a core position in my portfolio to handle the energy sector that I'm holding long term. Chevron pays around a 4% dividend, and it's going to be a holding in my portfolio. I'll pass it on to my kids someday. Probably never sell the stock, all right? General Electric, you guys will notice this on one of my monthly stock recommendation videos. General Electric was one of those guys that I pushed out to you guys. I'm still happy with the position. I took a relatively small position in it because at $25 a share, guys, I went ahead and picked up 100 shares of it. You know, 25 shares, $25 for 100 shares, $2,500 position put me at 1% of the total overall portfolio that I've got. And it actually gave me a really nice industrial play. It's actually a diversified industrial play because they're in like 25 different businesses. General Electric is huge, and I didn't mind putting it over here and sitting on the, it's a 3.5% to 4% dividend. I think it's closer to 3.83% dividend on GE, and I don't mind sitting on the stock and getting paid the dividend. I'm going to continue it, dividend reinvesting, and I'm going to hold the stock long term. So that was one of those picks that I pushed out to you guys on a couple months back on one of the monthly videos. All right, Microsoft has been a long-term holding, probably second tier to Apple, certainly, but Microsoft has actually outperformed right up there with Apple. Microsoft has just been on a tear. I ended up picking up Microsoft somewhere back in the low 40s some time ago, maybe even a couple years ago, and here we are at the mid 70s level. You know, we're looking at price targets $85 on Microsoft, top end growth of 11% on Microsoft. It's really just the cloud business that's driving this home, and it's a long-term holding of mine. I don't have a trade, I don't have a short position in it. It's a very long position that I've got dividend reinvesting on Microsoft. Pepsi is another long-term holding. I've held Pepsi for years, and it's fun to watch these stocks as you've owned them for years and how they kind of evolve over time. You know, some of the best investing books that I've read have kind of explained stocks as being one of those things that you'll plant in the ground and you're not initially going to reap fruit from it. But the idea is to watch it grow, nurture it, and get it up to a point where someday it'll actually yield a lot more fruit than you can actually use. And I think that's a very fair analogy. You know, a lot of people want that instant gratification in the market. And in most cases, guys, if not all cases, that instant gratification is just not going to be there, okay? It's not. You have to set your portfolios up defensive to pay you back sometime down the line in the future, all right? Pepsi, Pfizer. Pfizer's been on a tear. Pfizer might make my top 3 for October, all right? This has been a pick that I've thrown out on my portfolio, and Pfizer's one of those stocks that I went ahead and bought. It's an enormous pharmacy company, never minded owning it. Kind of got tired of owning it, to be honest with you, but I didn't want to sell it because it just lingered in the low 30s. I mean, I kid you not, I've owned this stock now for years. I've been paid the dividend. I actually took it down to the low 30s and I put a new position on it, and not a new, but I added to my existing position, and that's paying off. Just got a huge upgrade today to equal weight to outperform. So had a huge upgrade today, took a bump in the stock, and it's a long-term holding of mine. It meets the healthcare sector allocation on this side of it, and then I've got Johnson & Johnson on this side, all right? Procter & Gamble, everybody knows that's really one of my top favorite stocks to own, and really if you don't own Procter & Gamble in your guys' portfolio, you really need to take a hard look at owning this stock, all right? There's been some YouTubers out there that are down on Procter & Gamble, and they have been punished for that opinion, all right? There's historical premise going back on Procter & Gamble. They continually increase their dividend for stockholders or shareholders, and if you've owned this stock, guys, it's done nothing but pay you back, all right? All right, so Procter & Gamble. Tractor Supply is one of those that I pushed out there in the low 50s. It's forming a base at 60. It's crept up to 62. You would have made killer money had you taken my advice on Tractor Supply. Again, the only caveat to that is I don't want to see you taking a recommendation from me in Tractor Supply at the expense of some of these other good names, all right? I don't want to see you have your entire retirement into Tractor Supply. As high as I think about this company, it's irresponsible to buy Tractor Supply at the expense of others, okay? So Tractor Supply, I actually have a short position on, okay, and I'm really just hoping for this stock to continue on its path upward. If it doesn't, I'll just continue to hold the stock, all right? Under Armour, probably my most disappointing position, and I'm actually kicking myself for taking a position in Under Armour. I kind of broke one of my rules. I broke one of my rules, and whenever you break a rule, when you're a self-managed investor, you will be punished for it. I broke the rule, don't try to catch a falling knife, okay? And that is a cliche that's out there in the industry, but it is so true. And Under Armour is in a load of trouble. And I actually think Nike's in trouble too. I think there is too much inventory out there, and I think they've pushed the price way too high on a lot of their merchandise that they're outsourcing overseas. And yes, making killer profit, but I just think people are getting tired. And there is a lot of inventory out there, and that's what Under Armour and Nike are suffering from. Now, I do have only a 100 share position on Under Armour, so not huge. It's only 0.8% of my portfolio. I will continue to own the name. One rule that I stuck with is that I didn't mind owning Under Armour. I love the company. I love their products. I love their endorsements. I love everything, but it's going to take a little bit of time for them to sift through this and start to kind of reinvent themselves, because I think their PE is way too expensive of a stock, honestly, even where it is right now, as boasting themselves as a growth company, all right? Union Pacific, the largest railroad in the United States. I've owned this for years. Another one of those industrial plays that sometimes I questioned why in the heck I even owned it, because it would just stay, you know, in between. I watched this stock go all the way down into the low 70s during the Brexit timeframe, I believe. Bought more of it, and watched it go really up into the 110, 115 range. It's come off of those highs, and now it's starting to march back up again, but it doesn't really matter because it's a long play for me in her portfolio. And I don't mind owning it and getting paid the dividend. 2.13% on Union Pacific. Verizon is another one of those companies that perhaps if I had to go back and do it again, I would have just held AT&T. If I would have had the hindsight on T-Mobile, certainly I would have patted myself on the back on that trade. At the same time, Verizon pays a nice healthy 5% dividend. It's a really safe play, all right? T-Mobile is more the growth aspect, and they're looking to take over Sprint, and I think they're going to do it, guys, all right? And that's going to be huge for T-Mobile. I'm actually with Sprint. They are my carrier. I actually like some of the things they do, and I hate some of the things they do. I think their customer service is horrible, but T-Mobile should be taking them over, and that's really going to solidify T-Mobile in the telecom space. But Verizon's been a long-term holding for me. And to round it out, we've got Wells Fargo. I am concerned with the probe that's going on right now with the fake account scandal. It's deeper rooted than what was reported, certainly, but I'm not going to sell the stock right here. I just think the valuation is too good, and it is my second favorite. If I could swap Wells Fargo out for any of the financial names, it would absolutely be JP Morgan Chase. So mark my word, that's probably going to be one of my top 5 must-own in the portfolio. And that's probably one of the only stocks actually that in my portfolio now that I do not own that I'm going to recommend to you guys as one of the top 5 must-own, especially for new investors. Walmart at 1.12% of my total overall allocation. And then IBM. IBM's been doing really, really well since I recommended it on my recommended top 3 stocks for the month. And I just basically took a long position in IBM and I'll continue to enjoy the 4% dividend on IBM. So that really kind of gives you guys a snapshot of the two self-managed accounts, all right? Keep in mind, I do have an S&P 500 index fund, and I have 529s for both of my children for their college education down the line. I'll be doing separate videos on 529 plans, all right? But just one additional thing to kind of mention here. One thing that you don't notice in these two accounts are ETFs and index funds. And I'm going to tell you, I actually liquidated my index fund, my Vanguard index fund in my Roth IRA account. It was already up 8.5%. I went ahead and liquidated that position. It will probably be the wrong move, okay? But I was up 8.5%. And I'm never going to get mad at myself for taking profits because I just don't see a lot of upside from here in the market, and I could be wrong, all right? But by taking those profits off the table and safeguarding that cash within my self-managed Roth IRA account, it gives me the positioning power to where if I do get a downturn, you know, of 10, 15, 20%, 25, 30%, then I've got those funds to redeploy and repurchase those assets, all right? An ETF is even more easy to trade in and out of, okay? I don't have VOO and I don't have VFINX, which has been a couple passive diversified assets that I've recommended to my new investors out there. But this is currently what I have right now. If I do get a downturn in the market, I'm okay with taking any one of these names into a downturn and just shutting it off. And I actually deploy that technique. I won't watch the market when it's on fire, okay? I won't. When it's going down every day, right now when the market is at an all-time high, this is when I pay the most attention, all right, in trying to get that defensive positioning going, all right? Now, I feel like it's prudent to just throw out there with these stock picks, these 21 or 22 stock picks that I've thrown out for you guys. Over here is my sector allocation, and I've got in the healthcare sector 6.75%, staples at 13.14%, technology at 9.7%, discretionary at 16.57%, industrials at 8.39%, materials at 2.08%, financials 9.62%, telecom at 3.89%. I currently don't have any exposure to utilities, and that's the #1 area of focus right now for me because utilities are non-cyclical. Everybody's using them all the time, and they usually pay a really nice a nice dividend, excuse me. Duke Energy being my favorite in the utility sector, all right? And last, energy at 29.82. I've actually just reduced that percentage today by trading out of a position in Cenovus Energy. I actually put a one-day position on it and made $500 on the trade. I traded out of it today. I could have stayed in the name and made an additional $750. Is it a successful trade? I made $500. You don't beat yourself up if you make money off of a trade position. You move on and you fight another day. All right. So this 29.82 has actually been reduced quite significantly because I had a 1,000 share position on Cenovus. A couple of stocks that I own outside of my self-managed Roth IRA account, which is in my brokerage account, is actually LightPath Technologies. They just reported killer earnings. I've taken them into some deep water, but I love what the company's doing, and I'm holding them outside my brokerage account, and if I need to hold them for long-term capital gains purposes, I will. And the last one is Marathon Oil, as I hold shares in my brokerage house of Marathon as well as within my self-managed Roth IRA account, all right? So that's really what plays into this 9.15. It's because I own 1,700 shares. I just sold 200 of those shares today as well. Guys, thank you so much. For you guys out there that request this information, this is tried and true. This is what I've got on September 20th of 2017. All right, so this will be online forever for people to come back and reference what type of stock picks I'm into. And this portfolio doesn't happen overnight. This happens with a significant amount of hours and days and years of research and time looking at the stock market. It doesn't happen overnight, but it can happen for anybody, all right? So I encourage you guys, enjoy, research the stock picks on your own. Of course, the ultimate decision in purchasing an asset like this is ultimately up to you guys. The purpose of the Independent Investor channel is just to help you guys understand the stock market more. If it's your first time tuning into the channel, please hit the subscribe button for me so you're notified of any future uploads that I put on YouTube. Leave your commentary at the bottom. Leave your stock picks at the bottom so others can view that. I like to promote a community atmosphere here and trying to promote a more intelligent investor out there. Listen, guys, thank you so much for tuning in to my portfolio stock picks. Good luck in your investment future.